Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And yes, the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, and all of your favorite podcast platforms. On this day after St. Patrick's Day, Wall Street taking some green off with money coming off the table today. Stocks pulling back after the St. Patrick's Day rally we saw yesterday, which kicked off the week with the Dow posting a 350-point gain. Today it was a different story. Stocks finishing mostly lower with tech names once again dragging down the market ahead of the big announcement tomorrow from the Federal Reserve on interest rates and a statement on the economy. They did start a two-day policy-setting meeting today, which will wrap up with those announcements. The Dow coming in for a closing loss today of 260 points. The S&P 500 down 60, and the Nasdaq plunging 304 points. All three of the major averages did not extend the rally we saw, resuming the sell-off today despite a batch of stronger-than-expected news on the economy, including construction of new homes up 11.2% in the month of February. Builders coming off a rough winter nationwide and starting some new projects. We also got the latest reading on industrial production, which was up 0.7% last month. That also came in better than most analysts had expected. Now the spotlight is on the Fed tomorrow. The Fed is widely expected to hold interest rates steady at the conclusion of that March policy-setting meeting tomorrow. The Fed will release that statement at 11 o'clock our time here on the West Coast, followed by Fed Chairman Jerome Powell's news conference a half an hour later. Of course, we'll have complete coverage on that tomorrow. Gold, meanwhile, popping to an all-time high today above 3,000. Gold continues to rally as tensions rise in the Middle East and also uncertainty over the president's tariffs plans, fueling demand for safe haven assets. Copper also has a new shine, hitting a record high. This is the metal that has a degree in economics, as they say, Dr. Copper. When copper goes up, that's usually a good sign for the economy, settling above $5 a pound today for the first time since May. Hopefully they save some corned beef and hash at NASA, with NASA astronauts Bush, Wilmore, and Sonny Williams finally home today with a little help from Elon Musk. I don't know if you heard the news, but they made it back home aboard a SpaceX rocket, along with a spacecraft, I should say, along with astronaut Nick Hague and cosmonaut Alexander Gorbanov, boarded a reusable SpaceX Dragon capsule last night and detached from the International Space Station today, and they are back home safe on terra firma. They did splash down off the coast of Tallahassee, Florida, in the last hour or so. Speaking of space, credit card bills are in the stratosphere these days. We'll get an update on that from Ted Rossman, senior industry analyst at Bankrate.com. Also this hour, we'll be joined live by Jerry Sullivan, national managing editor for The Real Deal commercial real estate news site, on what's happening on the commercial real estate scene here in the Los Angeles area and downtown L.A., also in the areas impacted by this year's devastating firestorms, where the recovery continues. But first, on your money, the markets, the economy. Yeah, we didn't forget about crypto, too. The whole works now. Joining us live, Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, good afternoon to you, sir.
Frank, it's great to be with you. And there's so much news going on now that all the news that used to fit into a week, even the economic news, now sometimes fits into just a day. So between inflation, interest rates, the Fed, earnings, price of gold, commodities, there's just almost too much to talk about. And, of course, the market itself has been pretty volatile as a result.
Absolutely. Well, great to have you back with us. It's been a while since we've chatted behind live microphones, and you're absolutely right. A blizzard of news and a lot of market gyrations these days. We've seen the market pull back following the big splash earlier this year. Give us your view of the overall market here, first of all.
We have to take a look at the big picture, Frank, always trying to get to that sense of what's the big environment where we're in. And today there was 74 new highs, 145 new lows. At the same time, you've got a majority of stocks trading below their 50 and their 200-day moving averages. That is domestic stocks. So I think you've got to play some defense here. And even last week, Frank, I wouldn't say shocked, but I was pretty sobering to see Microsoft, Mr. Softy, if you will. Microsoft hit a new 52-week low last week. So I think there's places to make money in this market. You mentioned gold, all-time high is a buy signal. European stocks, they're breaking out. But we've seen a real changing of the guard, and the Mag 7 with NVIDIA down some 16% this year, not so Mag anymore.
Right, and you kind of raised the flag on that one quite some time ago. In fact, on all the Mag 7 names, and NVIDIA took the spotlight today again with the NVIDIA CEO kicking off that big keynote, GTC keynote. They called it, with a brief view of NVIDIA's headquarters from the stage, and some announcements there. They call that the Super Bowl of artificial intelligence. The CEO there also told the crowd that he was up there without a net, no scripts, no teleprompter. People were cheering, but Wall Street apparently was not cheering. The stock closed down more than $4 today at $115 and change. Among other things, he said GM will use NVIDIA to help build self-driving cars. That was one big piece of news. They'll work on 6G technology with a number of technology players, and looks like the list goes on here. So the GM announcement actually was weighing on Mobileye stock. So a lot of people were watching that big event here. What is your impression of NVIDIA here now and the entire tech sector?
Well, first thing I think, Frank, is how amazing is mankind that, while most of the Middle East, for example, is, lobbing, makeshift rockets back and forth at each other. These incredible American and Western business people are coming up with inventions that are truly changing our lives. So I'm bullish on America. I'm bullish on this technology, but I'm not so bullish on the stocks themselves. Frank, we could very much be seeing the type of environment we saw from, say, 2001 to 2010. During that environment, the internet took over. I mean, the internet went from being kind of an oddity that a few people had to something that everyone had. Yet during that period of time, internet stocks and technology stocks were complete losers. So to me, the shine is coming off the Mag 7, despite a lot of the good news. And again, I mentioned some of the overseas names, Frank. Poland never sounds too interesting, but an ETF like EPOL, EPOL, it's up almost 40% just this year. So money is finding other new opportunities, and I do think that now more than ever is the best time I've seen in years to invest internationally. The dollar's going down, and some of these names, Frank, especially compared to NVIDIA, are simply dirt cheap.
On there live with Jonathan HOENIG, and let me ask you about some of the other things that look attractive here. Some of those European markets, as we've talked in recent weeks, hitting record highs, while our market has been going into gyrations. Obviously, tariff news seems to be rattling the markets quite a bit. Tomorrow is going to be a big day with the Federal Reserve's assessment on the economy, as well as a decision on interest rates. What else looks good to you right now?
Well, I mean, Frank, I think it's important for listeners to not get so political when it comes to the tariff issue. Just understand that, business people, they're not, kind of shoot from the hip. These are the type of investors and the type of business people who have to look 5, 10, 15 years into the future. And so it's understandable why the president changing tariff policy seemingly on a daily basis is prompting a lot of investors simply to sit on their hands. My colleague over at Fox Business, Charles Carino, actually reported that M&As were essentially on hold because of tariff uncertainty. And what I'm seeing is just a preference for non-U.S. stocks. There's an interesting comparison, Frank. It's VEU. Now, that's the ETF that does not hold U.S. stocks versus SPI. That's the one that does. VEU is up almost 10% this year. The SPY is down by about 14%. So we're really seeing international stocks outperform. And one that I like, we own it over at capitaspig.com, is DISV. That's DISV. These are small international value stocks. Been out of favor, Frank, for a decade or more. But these are the types of names that aren't popular now. I think in 6 months, a year, 2 years from now, as the pendulum swing once again, names like DISV will get a lot of action and make people a lot of money on the way.
Very interesting market dynamics here, and also interesting, as I'm sure you've probably noticed, the dollar has slipped against major currencies. We're at 109 versus the euro here now, 149 against the Japanese yen, and at 130 versus the British pound sterling. Normally, when the dollar weakens, that's usually a bullish for the stock market, right? Because it makes our stuff less expensive overseas. But now with tariffs in the mix, that dynamic seems to be changing.
If you're listening to sports,
how the Chiefs react to this loss will be fascinating.
Mixed with pop culture, sprinkled with celebrity interviews.
True or false, Kevin Bacon, for your role in Footloose, you attended classes at a high school.
That's true, yeah.
Yeah. Morgan Freeman, what was it like working with Gene Hackman?
He came up in one scene and whispered in my ear, "I'm going to hurt you." I believed him.
Then you're enjoying the Rich Eisen Show podcast.
Speaking of podcasts,
follow and listen on your favorite platform.
It also, Frank, really acts as a tailwind for European stocks in particular. One name you could look at is EWP. That's E as in elephant, W as in Washington, P as in Peter, EWP. That's an ETF that tracks the stock market in Spain. It's up 20-some% year to date. And Frank, you mentioned gold. I'll mention one more that I know I own. I feel like I'm waiting for Godot, waiting for platinum to finally take off. But PPLT, that's an ETF that tracks the price of platinum. And Frank, you know that old saying that a rising tide lifts all boats. So when we're seeing gold at an all-time high, silver breaking out, copper at an all-time high, I think it's pretty logical that platinum, which is now once again over $1,000 an ounce, I think it's time for it to make a run as well. So that probably would be my biggest pick right now, PPLT. You always want to do your own due diligence, but take a look at platinum, and I think it could probably deserve a place in most diversified portfolios.
Well, let me squeeze in a Viva España on that Spanish market news. That is really something. You're probably the first person that's ever mentioned Spain on this program. So, and platinum, by the way, has seen a move above 1,000 now, 1,019.30 at last check, down to $4 today. But platinum has moved above 1,000 once again. It used to be higher than gold back in the day, and gold right now, I'm looking at it at $3,040 and change. Silver. Let's not forget good old silver here, above $34 an ounce, the highest it's been in a while. What about silver here?
Frank, again, that the rising tide lifts all boats. I think, and what you started to see in the last few days is a lot of the mining stocks themselves also participate in the move. So, one of the things that affects metals prices are the prices of those mining stocks. Another is the dollar, which you also mentioned. So as the dollar goes down, generally makes metals more precious, so more expensive. So silver, platinum, and even one more that's even more obscure, Frank, is palladium, PALL. That's an ETF that was $115 just last October. It's under $90 today. And if this truly is another inflationary period where we see metals continue to rise, I think the whole complex, platinum, palladium, silver, and gold will all do well.
Palladium, not just the name of a wonderful place there on Sunset Boulevard, which was built in 1940. That's the palladium, of course, in Hollywood. Palladium, the metal, getting new attention as well. And what about copper, near its all-time high, the one that we talked about that has a degree in economics? And when copper goes up, that's usually a positive sign for the economy.
Well, I agree with that, Frank. As you said, Dr. Copper, although they don't make a lot of phone lines out of copper wire anymore, one equity way that could be a way to play this is another emerging market. And, there was a time in which emerging markets were some of the hottest ideas on Wall Street. People wanted exposure. Now that's changed in recent years. Everyone has wanted big cap tech, but Africa is another one, Frank, that I'm very bullish on. AFK is the ETF. There's a lot of gold exposure, and as you might imagine, mining companies in Africa. But if you're looking for something that's strong, that's not going to move like Microsoft, it's not going to move like NVIDIA, it's truly going to be a non-correlated part of your portfolio, definitely do some due diligence on AFK. Probably about as far off the radar screen as you can get, Frank, but it is breaking out, and we do own it over at capitalspig.com.
You mentioned one of our guests here, Charlie Gasparino. We look forward to seeing him at the upcoming Milken Global Conference here. Hopefully you'll be there too here in Beverly Hills. And on that M&A story, that's very interesting. What do you see ahead for M&A activity, mergers and acquisition activity with all of the uncertainty here with the tariffs and so forth?
Well, the benefit would be a less restrictive Justice Department. I mean, Frank, people don't realize how many deals, which could be great for shareholders, could be great for even employees, are scuttled not by economics but by government. In fact, the company that makes the Roomba, that is iRobot, This is a company that was going to be purchased by Amazon, and the government scuttled it. The government called it off, and it is now essentially dead money. I mean, it's talking about laying off its workforce, and the stock has gone down dramatically. So, to the extent that President Trump will allow more companies to merge, to maximize efficiencies, and Frank, there's actually a way to play this trend. Interesting ETF. The ticker symbol is ARB, A-R-B, and this kind of lets you be Ivan Boesky. You get to be a merger arbitrageur, basically betting on companies that are going to be acquired and selling short the companies that are doing the acquiring. So it tends to be a steady grower, not correlated with the market. The ticker, once again, is ARB, A-R-B. I think another unusual name to look perhaps in your portfolio.
Very interesting. And while we have you on the line, we're talking to Jonathan HOENIG here. And looks like the airline stocks have taken a hit. The DOGE effort, the DOGE initiative, taking a look at the government travel expenses. And it looks like the airlines and even some of the credit card companies have taken a hit on this. So what are your thoughts about how the DOGE efforts are impacting the markets?
Well, I'd love to see real considerable government spending, Frank. And look, if the government is wasting money on airline tickets, I think that's something that's important to get into. As you said, it's really hurt a lot of these airline stocks. United, for example, is down 25% year to date. And the one thing, Frank, is, traders always say you got to cut the losses and let the winners run, because when you let the losses run, the math becomes just almost impossible. I mean, think about it, Frank. Tesla, when it's down some 48%, 50%, it takes 100% gain then to get back to even. So beware of weak stocks, beware of falling stocks, and never add to those losers. That's every big loss, Frank, started off as a small loss and a trader who felt he had to be right. So listen to the market. When you buy it at 50 and it's at 45, I think you should be fearful, not greedy, and respect what the market's telling you. And there's a lot of those falling knives in today's action, Frank.
And it sounds like some of those lessons are contained in an excellent book that's out there. It happens to be called Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Am I right about that? You happen to have written that book, right?
That is a great. Price is primary, absolutely right, because price is what we trade, Frank, and companies can be wonderful companies. Microsoft is a terrific company, great products, but the fact is that the trend of the stock is down. It's off by some 8% already year to date. And just as when gold prices hit an all-time high, I mean, most people think, ooh, I can't buy gold now. It's at an all-time high. I got to wait to buy it lower. But, Frank, how many times have we talked about gold at an all-time high over the last year? I mean, a dozen or more. And in a bull market, turns out that the all-time high isn't the all-time high. It's just an all-time high. Another one will be around tomorrow. So I do think you'll see continued weakness for Microsoft, strength in gold. It's simply the wind, the way the wind is blowing today.
Any other specific places where you are putting money now and or taking it off the table?
Yeah, well, I mean, once again, on that international tip, Frank, I think an interesting name is PICB. That is PICB. This is an international bond fund. Again, pretty off the radar screen probably for many of our listeners. But as the dollar declines, as the dollar weakens, international bonds tend to do very well. So PICB, you could make some money on. And China, Frank, so much to say about China. Of course, it's in the news every day with President Trump and tariff anxiety and trade anxiety. A lot of their stocks are at multi-year lows. So if you really want to be an adventurous trader here, check out shares of FXI. That's just a big cap index of Chinese stocks, which could have been put in a multi-year low in recent weeks. Always do your own due diligence. Always save for the future. And Frank, of course, always tune into Mottek on Money for the top names and the leaders in business. So thank you for having me this evening.
That's terrific, Jonathan. Thank you very much. And be sure to tune into Fox News and Fox Business to see Jonathan HOENIG. And also make sure you get the book. The book is Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan, it's always fantastic to have you with us here. Thank you very much for covering all this ground here today here on Mottek on Money on 790 KBC.
My pleasure. Have a great evening.
You too. Thank you very, very much. And right out to the freeways we go. As we say, it's a beautiful night for an evening here in Los Angeles. Let's get the latest on your ride now, 790 KBC.
There's a kind of hush all over the world.
Yes, there is. 790 KBC welcomes Herman's Hermits, starring Peter Noon, coming to the Canyon Agura Hills April 4th. Tickets are on sale now at AXS.com. And right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller number 9. Call right now, 1-888-795-2222. Listen carefully. Tickets furnished by the Canyon, where music meets the soul. Stocks pulling back today. The Dow coming down 260 points at 41,581. The S&P 500 down 60 at 5,615. And the NASDAQ down 304.5 points. 17,504. The yield in the 10-year note at 4.29%. The price of oil hovering at around just below $67 a barrel. Gold hitting record highs today, as we've been talking about. Right now hovering at around $3,040.60 an ounce. Silver above 34 an ounce at $34.40. And platinum at around $1,019 and change. NVIDIA stock pulling back today in the face of that big GTC event that the NVIDIA CEO presided over today. NVIDIA stock closing down more than $4 at $115 and change. Apple down $1.31 at $212 and change. And Tesla in reverse again today, down nearly $13 at $225.31. Boeing stock down 28 cents at $161.57. The big news today that the stranded astronauts who went up on a Boeing spacecraft were brought back down to Earth today on a SpaceX spacecraft. The Boeing Starliner capsule had to return empty back in June without the two astronauts, but they were brought home today by a SpaceX capsule, along with a couple of other, one other astronaut and one cosmonaut also aboard that spacecraft that safely returned to Earth. Checking the cryptos now, we see a Bitcoin hovering around 82,311, Ethereum at 1,914, and Doge at the moment at 16 cents. And now the latest news on 790 KBC. Mottek On Money continues here, 790 KBC, Los Angeles, on the long and winding road to recovery here following the firestorms in January. Residential real estate as well as commercial real estate impacted by the epic fire disaster here. Joining us live now is Jerry Sullivan, National Managing Editor at The Real Deal, commercial real estate news site, and what's happening in commercial real estate throughout Southern California. He's also watching what's happening in downtown Los Angeles, Century City, and all the big commercial real estate areas here, as well as the areas impacted, of course, by this year's devastating firestorms. Jerry Sullivan, thank you very much for coming to the line here this afternoon.
Hey, it's great to be with you, Frank.
You guys do a great job there covering all things commercial real estate. What's the very latest there from your desk on what's happening with the firestorm recovery and what's happening on the commercial real estate scene?
Well, on the recovery, I think one of the most significant things that happened, our reporter Abby Nearing broke a story earlier this week about Mayor Bass floating the notion of suspending Measure ULA on sales related to the fire zone up in the Palisades. And as you know, Measure ULA puts a property transfer tax on any sales of more than $4 million, and it's been a significant inhibitor to the local market since its passage more than a year ago.
Jim Rome takes on sports.
I've been doing this show for decades and decades and decades.
With rapid-fire takes.
Learn how to stop it, learn how to run it, or at least make a good argument. I don't even like the play. I've never fought so hard to defend something I don't like.
Scorching debates.
You can beef about anything you want. Why are you pushing me?
He's the Spitfire of sports smack.
Just so you all know, this is no one-off. This is what we're going to get every single day.
Let's go, Jim!
Let's go!
The Jim Rome Show podcast. Follow and listen on your favorite platform.
And, would be even more so, I think, in the recovery process. A lot of people who are burned out and getting insurance checks that aren't going to cover the rebuild to start with, and so they decide to sell, and out of that, they're going to have to pay this additional tax. So the mayor floated the notion of suspending that in regard to deals in the burn zone. Whether she has the authority to do that, I think Mayor Bass is looking into that. That was passed by referendum citywide. And so it's not clear whether the mayor or city council could override it. But I think it speaks well of the mayor trying to get a grip on ways forward and very practical ways forward. And so I think that bears watching.
Very interesting. ULA was that measure that was supposed to, it was a so-called mansion tax, which the real effect was mostly in commercial real estate and was supposed to fund homeless programs, but came up well short of what was expected there. And people in the real estate business, as a matter of fact, Rick Caruso and Lou Horn, the president of CBRE here, has been criticizing ULA and basically calling it a disaster here for commercial real estate. So thanks for highlighting that. That is very interesting. And any other additional details about the fate of ULA given the circumstances here?
I don't know. Again, they're going to have to see if they can make that move. But I think also, and it bears mention here, and Mr. Caruso and Lou Horn, I know, have their clear points about the effect of ULA on the marketplace and the mechanics of the marketplace. I think also, the measure ULA was sold very much as on a class conflict basis. And if you will, it was a soak the rich appeal, right? Yep. And I think that's wrongheaded and short-sighted and to some degree mean-spirited. And I think the mayor trying to walk back a little bit from that specific to the victims of this fire, I think will go a long way towards maybe easing off the sense of class conflict, socioeconomic conflict, however you want to put it. I think it would be good for Los Angeles for everyone to just, for this, as an exceptional basis, take that out of the conversation. And so I see a hopeful sign there. We'll see what happens with it. But I think it bears mentioning that there's certainly an economic and marketplace effect. And there's also a larger social factor that I think everyone ought to be observant of.
All right. What's happening in downtown Los Angeles now? That slow return to the office is something we've been talking about for quite some time. And you on this program, I believe, had called what appeared to have been a bottom for office space. And are things now starting to swing back the other way with this return to the office now?
No, I think it's downtown has hit a bottom and it's bumping along a bottom. And I think, recent deals like the gas company tower and some of the buildings that Brookfield gave back, Class A buildings at 7th and Fig, indicate as much. And you're looking at between $100 and $200 a square foot on sales prices in the downtown area, including, Class A properties. So that's a bottom that, and it's, things are bumping along. We did a story a couple weeks ago about the return to office of city workers and county workers, public employees, essentially. They're not being called back. I think so many of them are on a so-called 3-day-a-week schedule, but they all there's waivers that allow department heads to excuse them. And, I think anybody who's been in downtown LA in the Civic Center knows that there's a dearth of activity. And it sort of boggles the mind what reason the city and county would have for not calling their employees back from a pandemic condition that, the pandemic was called off more than a year ago, right? So it boggles the mind. I don't see too much improvement. In fact, Frank, we broke a story today about Savills consolidating its 2 offices in LA into a new office in Century City. So they're actually going to take a little more space, combine the 2. They'll take more total space in Century City. One of the offices they're combining is Westwood. So Westwood, Century City, you're pretty much in the same West Side market. The other one was downtown LA. And so they're pulling out of downtown. Going from Westwood to Century City, like I said, you're still on the West Side. But closing the LA shop or downtown shop to go to Century City, when you have a broker like Savills doing that, I think it says something about the marketplace.
You're packing them in there in Century City where occupancy is quite high. What about every time I drive by there, Jerry, I think of you, the ocean-wide project there, the unfinished so-called graffiti towers. What's the latest on that?
Not much, Frank. And, the more I talk to people, the more you realize it's really one would be hard-pressed to come up with a reason to do anything other than demolish that project. A half-built 3 towers covered with graffiti again, right? They cleaned it up once and now it's covered again. Owned by bankrupt developers who are in China. And this sits right across from your convention center, right across from Crypto.com Arena. It's an eyesore right in the middle of the downtown skyline, and it's becoming a handy reference, unfortunately, for what ails downtown. And the last thing you need when things are tough is that handy, sort of caricature that people can point to, and that's what it's becoming.
Tremendous eyesore. And well, thanks for that update, Jerry. We'll continue to follow it. I'll keep sending you pictures of it as I drive by there regularly. Jerry Sullivan, National Managing Editor at the Real Deal commercial real estate news site, authoritative site on what's happening on the commercial real estate scene here in Southern California as well as nationwide. Jerry, thank you very much for taking the call live with us here this afternoon.
Absolutely. Thank you, Frank. Take care.
Hope to talk to you soon again, Jerry. Thank you very much. And out to the freeways now, 790 KABC. Mottek On Money continues here, 790 KABC. On the campaign trail, President Trump called for a temporary 10% cap on credit card interest rates. Last month, you may remember, Senators Bernie Sanders and Josh Hawley, a Republican, introduced a bill which would do exactly that. It remains to be seen what comes of that. What about consumer issues under the second term of President Trump? Let's bring in Ted Rossman now, senior industry analyst at Bankrate.com. Ted, thank you very much for taking the call here this afternoon.
No problem. Thanks for having me.
We got the Fed meeting wrapping up tomorrow with the decision on short-term interest rates and a statement on the economy, and then a full-blown news conference from Fed Chairman Jerome Powell. Everybody will be tuned into that. What do you think, first of all, is going to happen tomorrow?
The Fed's not going to change rates this month. In fact, they're probably not going to change rates at their May meeting either. I think a lot of the discussion tomorrow, though, is going to be about, well, one, Powell's going to be asked about political stuff like tariffs, and I think he's probably just going to decline to give much information. But he's also going to be asked about future rate cut possibilities. Investors are pricing in perhaps June as the most likely next cut from the Fed. Lots of time between now and then, more inflation data, more jobs data, more time to sort out the tariff situation. But I do expect that tariffs will be a central topic tomorrow, as well as when the Fed makes their next move.
All right. And, of course, what the Fed does tomorrow will impact short-term rates, which impact consumer loans as well as business loans and so forth. And now there seems to be a new effort. In fact, President Trump appears to be supportive of this, calling for a 10% cap on credit card interest rates. Right now, the sky's the limit, right, as far as credit card interest rates are concerned. And we saw the unlikely pairing of Senator Bernie Sanders, independent from Vermont, and Josh Hawley, Republican from Missouri, teaming up in a bill that would limit credit card interest rates at 10%. What do you see ahead for this bill?
I find it so interesting that these discussions are happening. I don't think this bill will pass in its current form, but it's very notable that this is being talked about. You mentioned the co-sponsors in the Senate. They're about as far apart politically and ideologically as you can be. Same thing in the House, where staunch conservative Ana Paulina Luna is paired up with liberal Alexandria Ocasio-Cortez. Interesting here. How often do these people agree? And the fact that they're talking about it is notable. I don't think it's going to pass, but it is calling more attention to the issue and just how high credit card rates are. The average is 20%. A lot of people are paying 25 or sometimes even more.
Like 40%, almost 50% in some cases, right?
The highest I've seen is about 36%. There is no federal cap for most people. There is a cap for members of the military at 36%. That's become kind of a de facto ceiling for others. The highest rate cards tend to be store cards because they're easier to get and not as selective about credit quality. And then, of course, those that are catered at more of a subprime audience, people with lower credit scores. A lot of those top out around the 6%. The ceiling, the unofficial ceiling, has kind of grown, though. A few years ago, store cards didn't really go past 29.99. Now they're all the way up to 35.99 in a lot of cases. And that's really just based on the Military Lending Act. And it's kind of become an unofficial ceiling for others. It would be great if credit card rates came down. The unintended consequences, though, would be less access to credit because banks would likely pull back and fewer rewards. It's the access to credit that could really hit those, especially with lower incomes and lower credit scores. If it's not profitable to lend to them, banks would pull back in a big way.
How is access to credit these days?
Mostly good. There have been some cutbacks with the same riskier audience we're talking about. I mean, there have been some cutbacks in terms of credit offered to those with lower incomes and lower credit scores. Overall, credit's still flowing freely. It's flowing very freely for those with good credit scores. Demand hasn't been so hot the past few years, so that's been a bit of an obstacle for banks. I mean, the credit card market's doing pretty well overall. The delinquency situation has stabilized after hitting the highest level since 2011. I get the sense banks are feeling pretty good about things, but they definitely have their eye on some of these regulatory issues, and it's certainly worth monitoring the job market as well. So far, mostly so good on that front, but that's a big predictor of future delinquencies.
All right, and what about the president's firing of the head of the Consumer Financial Protection Bureau, their director there, and what's the outlook for the future of the Consumer Financial Protection Bureau?
That agency has been such a lightning rod since its inception 15 years ago. Basically, Democrats love it, Republicans hate it. You know, you have people saying that it's necessary and it's a necessary watchdog. You have others saying that it's this kind of rogue bureaucracy with too much power and too little oversight. I believe the administration would like to do away with the CFPB. They probably won't be able to totally do away with it, but it's not going to be very active the next 4 years, that's for sure. And there are some worries there about who's looking out for consumers. I think a lot of states are going to have to pick up more of the mantle, especially liberal, blue-leaning kind of states. You know, the CFPB, love it or hate it, has done some good things for consumers. They have a complaint database that's fielded millions of complaints and gotten answers from companies. So there is a void there, and some states are probably going to fill it more actively than others.
Ted, thank you very much for taking the call here today on the big consumer issues, and we'll all be tuned in tomorrow on what's happening there. Maybe some of your colleagues will be at that Fed news conference as they have in the past. So thank you very much for sizing things up here. Ted Rossman, Senior Industry Analyst at Bankrate.com, live with us here on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KBC.
Michael Rosenbaum and his Smallville co-stars take you behind the scenes of one of the greatest shows of all time.
Talkville.
I just had a flashback.
Tom Welling's here.
We're going to do a podcast
throughout the year. We've got a lot of season ahead of us.
It's big talk.
This is good fan stuff.
Yeah, there was some good stuff.
If you're watching the show, this is good stuff.
Yeah.
On Smallville.
Yeah.
They made it like this is the first time they've seen the guy ball.
That's hard.
I thought it was pretty dark.
It's Talkville.
We're pumped.
The Smallville Rewatch Podcast.
You got to be a part of it.
Follow and listen on your favorite platform.